like to do these. There's certain people like Jim Cramer or Paul Krugman.
Yeah.
Whatever they say, they're always wrong.
Yeah.
So whatever they say, or I sort of just tweet out the exact opposite has been confirmed, right? Paul Krugman says that runaway inflation is overblown and dismisses stagflation. All right, confirmed. Hyperinflation is coming, right? It's just a
Yeah.
sort of a sarcastic. This is what a translation of what they really mean.
Friday, July 8th, 2022, Maneco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Jim Lewis of Wall Street Silver. They've been around for about a year and a half, maybe a little less, and they've had a huge impact on silver, on precious metals, and I would say also on like alternative economics, especially with their tweets. They've got a lot of follows on Twitter. I recommend you follow them there, and also on their YouTube channel. So Jim, thanks for coming on. How are you?
Good. Thank you for having me. And I don't know how much impact we're having on silver because it's down a lot since we started this channel.
But
sort of an inverse, maybe we've been an inverse indicator for silver. You know, Wall Street Silver came along, and silver was 25 when we started, and it briefly got up to 30.
Yeah.
So it's sideways a long time, but now it's 19 and people are crying.
I remember that weekend. I think it was the weekend of I think January 30th to February 1st and we had like a big live stream. You were there, I was there, and people were excited. And actually, I thought, I'm not going to get too excited because these guys can do a lot of stuff. The bankers, I didn't think though that it would take. We'd be here today
a year and a half later, and
we'd be trading at 19. But I think the upside has been that the community has grown despite.
Yeah, that's true.
And I think people who have bought real silver, they realize how valuable it is really to hold a silver coin or a silver bar, and they've learned. You wouldn't have been able to grow, I think, as much as you have if silver had gone to 200. People wouldn't have cared. So at least you're building a community.
Yeah, we're up to 200,000 members on Reddit. Our own YouTube channel is right at 50,000 subscribers right now, and our Twitter is my Twitter account's at 181,000 now. So the audience is there, people care, and I think a lot of the attitude on Wall Street Silver's Reddit community is people just buying. They're like, oh, it's 19. It's never going to be this cheap again. And people are just trying to buy the discount, buy the dip.
Yeah.
But, who knows? Maybe it's going to 18. Maybe it's going to 17. I don't know. But I'll just, I'm trying to scrape enough cash together. I want to buy another monster box while it's down here. And, I'm trying to figure out which one to buy. Has the best premium.
Yeah, I bought some silver $50, 1964 the other day. Not that many, but I always try to keep buying silver. And I think it's also tough to get maybe an ounce of silver for $19. You're probably paying 25, 26.
Yeah, 23. I think you can, if you if you go for some of the generic rounds, 22, 23. And some of the sovereign mint coins, like the Austrian Philharmonic or the South African Krugman, those are some of the most reasonable. If you want those sovereign mint coins from a sovereign government that have a little bit more of a, recognizable value, I love that Krugman coin and the Austrian Philharmonic. They're beautiful.
Yeah, I have some of those. The Krugman coin is nice. It used to be Krugmans used to make gold coins, but silver now. So I assume you saw the non-farm payroll number, jobs number. They were a lot better than expected. And what do you think?
Well, what's interesting is gold and silver did not go down. In fact, if you look at them right now, here, do you mind if I share my screen?
Go ahead.
If you look at gold is up $6 right now, and silver is up a little bit. And not it's not anything meaningfully up, but the initial reaction was, all right, if the jobs number is really strong, that means the Fed can be more aggressive in hiking rates. Well, wouldn't most people would think, oh, well, silver and gold are going down now because of and the initial reaction after the number came out was they did go down. But the fact that they're bouncing back, maybe this is a bottom. I mean, I don't know. Maybe I'm just, hoping more than anything else. But the fact that they won't go down anymore in the face of the fundamental news, where your initial reaction would be they are going down based on this news. What does that tell you?
Yeah, I think also I saw an article on Zero Hedge after the jobs number, because a lot of people like Goldman Sachs and the other Wall Street houses, they're expecting a weak number, seeing that we could get the second quarter of negative GDP, first and second quarter. And that's like reflective of a recession. How can the job numbers be growing like that? Some people, I don't think the market buys into it, maybe. And
well, is it partly that people are still coming back to work from, the companies are trying to get people back to work, or at least back in the office after having been shut down for so long? I think we're still coming. It's not necessarily job growth. It's like jobs returning to the job.
Yeah,
that's a big portion of it.
I think Biden made a big deal out of that. Oh, this is historic. No president has ever created so many jobs, but they didn't create jobs. They were just there were jobs that were turned off, so to speak, during lockdown. They're back. The other thing I would say, even if there are jobs being created, I think there are jobs that are more in the service sector, because I think the economy is still, even though it looks like we're going to recession, there's still a lot of demand, credit demand, and people are still buying things and going out, like here as well, more towards the upper middle class, and restaurants are still hiring. And I think it's a little bit of that. It's like a credit bubble, but the economy itself, I don't think, is doing very well. And yeah, I really love your tweets because you're like the meme master, I would say. And I wanted to share this one here with the viewers that you put up. I don't know when it was. When did you tweet that?
I probably tweeted that last night.
Yeah. So maybe you could go over this a little bit. Why?
Yeah. Well, here, shrink or X out the picture so you can see my comments on it. Or if Jim Cramer does something like that, says this stock is going up, it's like, all right, well, there's so many examples of Jim Cramer saying a stock is going to do something, and then it does the exact opposite. So it's almost become a running joke on Twitter for anything Jim Cramer or Paul Krugman that they put out there. It's just the opposite's going to happen.
I think a couple of weeks ago, Jim Cramer said it was good to buy gold. Maybe that's why gold went down.
Yeah, maybe, yeah.
So let's have, you got quite a lot of likes on that, 3,500.
Yeah.
So I just want to.
Yeah, we enjoy it. A lot of people, my Twitter is more a mixture of serious, data and just humorous stuff that I find entertaining.
Yeah, I think like humor is good though, because sometimes the subject can get really dry and serious.
Yeah,
that's another good one here. You want to go through that, the Fed's balance sheet?
Well, they've been talking aggressively about shrinking the balance sheet, right? They've got $9 trillion now on the Fed's balance sheet. But if you look back over history here, the financial crisis of 2009, they had that big spike there on the left. And then look at that whole period from 2013 to 2019. There was no crisis there, right? There was really no crisis. And even then, they really couldn't shrink the balance sheet. They tried briefly, but they had to stop right away when the system froze up.
Yeah, the repo crisis, yeah.
They shrank it a little bit. That was Janet Yellen's, it'll be like watching paint dry.
Yeah, I remember that.
And they couldn't do it. As soon as they reached a certain point, the bond market froze up just to lack of liquidity. So boom, what happens? The repo crisis, And then the virus crisis happened a few months after the repo crisis. And look at this. If they couldn't shrink the balance sheet from 2013 to 2019, when there was nothing but just calmness and economic growth, what makes them think they can do it now? Seriously.
And now we have, inflation at almost double digits. We have the, the crisis in the Ukraine. There's so much going on that to think they can, shrink this balance sheet that much is wishful thinking, I think.
Oh, I agree 100%. If you think about things, already the mortgage market's freezing up. I think interest rates for a 30-year mortgage in the United States reached 6% at one point. Then they came back down a little bit in recent days, I think into 5.3, 5.5%. But it's mortgage rates were down at 3% in the United States, just a few months ago. What are they in the UK? I mean, if someone wanted to get a mortgage right now, what does someone have to pay?
Yeah, they're still quite low because they're based upon our 10-year gilt yield, which has been kept down quite a bit, I would say. It's like, but they've gone up here as well, mortgage rates. So it's not going to bode well, even though the housing market's still quite strong. I would say only because the pound has dropped like 10%. Versus the dollar in 2022. So yeah, the housing market could be up, average house prices could be up 10%, but in real terms, they're like unchanged.
Yeah. We'll see what happens. I think the Fed's bluffing into what they can actually do. Oh, this one was kind of interesting. This
I
one
like
really
this
popular.
one too. Yeah.
I'm on the carnivore diet, a lot of protein, and I've lost 50 pounds, or 20 kilos since January, and it's just eating a lot of fish, a lot of meat,
eggs. Again,
a lot of eggs, a lot of bacon. I love bacon.
Yeah.
But look at this. I mean, this is the vegan fake meat area of the grocery store. Everything else is sold out.
Yeah.
But people still, even in a supply chain shortage, people don't want this fake stuff. So
did you take that picture or you just got that from?
No, that's someone on Reddit posted that picture.
Yeah.
And so
I've seen some of your tweets on shrinkflation, and shrinkflation has actually been happening for years, even before 2020.
Yeah.
It's be getting worse now.
Well, I like to post those, and they're popular. One of our most popular tweets, I think, got 3 million views on toilet paper shrinkflation, just comparing rolls of toilet paper.
Yeah, they've become thinner, haven't they? Like not as wide.
But what's also popular is these protest videos. There's all these protest videos from all over the world have just been extremely popular, because the mainstream media is not covering these things. They're not showing what's going on with the farmers in the Netherlands right now.
Oh yeah, I saw that some farmers now in Italy and other countries are starting to protest. So it's almost like a contagion.
Yeah,
I'm just trying to find a shrinkflation one here about
it might have been a few days since I've done one.
Reese's cups, they've gone, they've shrunk the packaging, haven't they?
Yeah.
I
tweet about a lot of different. You can see my tweets are all over the place, but I think that's why people I follow silver topics there.
Yeah, this is an interesting one on the housing market, and I think Liz Alden retweeted that. She liked that. Do you want to talk a little bit about that while I get Billy down?
Well, this one was about the housing prices are going up. But if you look at the bottom one, University of Michigan, in their consumer sentiment survey each month, one of the questions they ask every month is this a good time to buy a house? And if you look at the data on the median new home prices and the 2-year % change, this is really telling you something, right? This is telling you got to wonder how much longer the housing market can really stay at these elevated levels when the consumer sentiment, the bottom red area, is so hugely negative on buying houses right now.
Yeah.
with interest rates, you would have this combination of extremely high prices and now high interest rates. So the affordability of actually coming up with the monthly payment to actually purchase a home these days is getting kind of ridiculous.
Yeah. Yeah. And I also saw that, the ADP number, which usually comes the Wednesday before non-farm, they
Yeah,
they didn't publish it because they said they're rehashing the number. And
probably because their number didn't match the government number. And
yeah,
the government told them, hey, you need to fix your methodology.
yeah,
You're not on the right narrative, right?
their ADP number must have been a negative number and the
Yeah.
government number. One thing, there was a guy, he used to be on Twitter years ago, a guy from, and they used to put it, I think, no, they used to put his videos on Zero Hedge, a guy from Trim Tabs. And he said the best way to really know what the jobs market is doing is to look at the US Treasury tax receipts, payroll receipts, because then you can see how many people are being employed. And he explained that this non-farm payroll number is basically just a survey, and then they extrapolate. They survey a few people, a few employers, and then they extrapolate and they come up with this number. So I wouldn't be surprised next year after the election that these numbers wouldn't be revised massively lower.
Yeah, it's a lot of it. There's a lot of games that can, just like the CPI, where they can they can do some swaps. Like if one product's gone up, they can swap it for an equivalent, some substitute product.
Substitution, yeah.
And so there's a lot of games that the data people can play at the Bureau of Labor Statistics to really artificially make the numbers say what they want them to say.
I see you've got Powell there behind you.
Oh yeah,
silver.
I have a lot of people who like to visit the vault back there. Sometimes Janet Yellen comes in to visit.
Does she know what silver is?
I don't know, but she's back there.
Yeah.
Then sometimes we have Justin Trudeau visit.
Justin Castro.
Or Putin comes in when we're doing a gold subject. We got Putin, or we have Trump sometimes in there.
Well, yeah, I wanted to ask about Jay Powell. Do you think he will be able to basically bring down a little bit the CPI without causing an accident and not have to go full bazooka again with the liquidity?
I don't think there's a chance in heck of avoiding a recession at this point. You follow the Atlanta Fed, the GDP now. That's now negative. It got as low as -2%, but I think it's been changed now to -1.9. But the real number, the data's done. I mean, it closed as of June 30th. So now they're calculating their numbers, and the real GDP number gets reported on July 28th, I believe. But there's never been, the Atlanta GDP is typically very accurate. If you look at historically how close it is to the actual number that gets reported by the government, the margin of error is rarely more than 0.3. So if they're at -1.9% right now, that would argue it's going to be at least a -1.5 to 2% type of number for GDP for the second quarter. And the first quarter was -1.6.
Yeah.
So
2 consecutive.
I mean, forget whatever the jobs number was.
Yeah.
We're technically in a recession.
Yeah.
And once that happens, politically, I think they're going to try to raise rates as much as they can as soon as possible, because politically, once the news is we're in a recession, it's going to be much more difficult to raise rates at that point.
Yeah, and I think maybe because Powell he was only actually confirmed by the Senate 6 weeks ago or so. And
yeah, something like that. Yeah.
Yeah, so it took a long time, and you kind of wonder if there's a deal made whereby Powell said, "Yeah, we have to raise rates," and then he said, "We'll do it as quickly as possible and as much as possible, and we'll stop a few months before November, and then we'll cut again, and hopefully we'll get the economy back on track for the election." You kind of wonder if that's what they're planning.
Well, he's confirmed for a second term now. He's probably not even thinking about a third term, so he doesn't have to care about the politics anymore, right? He's sort of free to do whatever he wants as long as he has the voting members on his side and on the Fed governing board. But you got to ask yourself, all right, if they're raising rates to slow down the economy just so they have room to lower rates to save the economy, well, why aren't we doing this? I mean, it's like we're creating a bust.
Yeah, it does.
So we can now create the next boom, right?
Yeah,
what's the point?
It's just crazy, and the thing is that it's all a fallacy when he comes out and says and other people, they say the economy is growing strongly and that's causing inflation, because if the economy was healthy and growing healthily, you'd have more supply of goods, people employed, earning money. You wouldn't have inflation, and that's what they can't say. You know, we just created a false credit boom, and we just have to rein it in. I think they're trying to rein in a credit boom, but they can't say that. They say we're trying to slow down the economy, which makes no sense whatsoever. And
well, here's what happened in 1974. I went back and looked at the 1970s when we had the last energy crisis, energy inflation. I don't know if they had food inflation like they do now, but in 1974, we had a recession. You know, inflation was at, I think, 8 or 9% in early 1974. They raised rates, caused a recession in 1974. It brought inflation from 9% down to 5% roughly in 1975. So in 1975, they exited the recession back to economic growth, but inflation never got back down to 2%.
Yeah, and it was 5% of a much higher base as well.
So it went from then 9% in 74 recession, and then 5%, and then as soon as the recession ended, inflation came right back to new highs on to 12, 13, 14%. So just having a recession doesn't solve the inflation problem. If you don't fix the underlying problem of what's causing the inflation, you haven't fixed anything. And what's causing this inflation? Well, it's a combination of energy, food, and credit, and too much money sloshing around in the system. They've dumped $9 trillion in, since 2008.
It's gone from
4 trillion then and another 5 trillion in this crisis.
Yeah, they were
9 trillion. Yeah.
They were at 800 billion, the Fed's balance sheet before the 08 crisis. Now, it was almost more than 10x. And not to count like Japan and the other countries that got involved as well.
So, but what you got to ask yourself now, okay, we're at 9 trillion. They're putting us into recession intentionally now with raising rates like they're going to do. And they're probably, with this jobs number, they're going to raise them 75 basis points again at the next meeting. So they're going to hurt the housing market even more and the mortgage market even more. And so what's it going to take to reinflate this economy when they decide, all right, we got to save the economy now. We're going to pause on our rate hikes. We're going to now go back to easy money, lower rates again before the election. Once we're in a recession, what does the government normally do? Unemployment benefits are going to be expanded. Food stamps, food support to families is going to be expanded. Stimmy checks, they like doing stimmy checks now, $600 per kid, $600 per adult. I got several kids. I got $3,000 the last time they did that, and I make good money. But it's so a round of stimmy checks. That's boom. There's another trillion. They're going to be bailouts for the states probably for their budgets in the recession if tax receipts go down. So what? Another 2, 3. How many trillions are they going to have to spend in stimulus to get this economy going again after they slow it down? Are we looking at? Back in 2008, it was it was tiny numbers compared to what they had to do in 2020. Are we looking at 5 trillion, 10 trillion for the next round of stimulus to get things going again? The numbers are starting to get silly, right?
Yeah, they get bigger all the time. There's a book, you probably heard of it, Fiat Money, Inflation in France. It's by Andrew Dixon White. I recommend it. And it's about the assignats in the 1790s, after the revolution there. they had a lot of debt. The economy was down in the dumps, and they decided the National Assembly to do an issue of assignats, but they're very reluctant to do it. They said we'll only do it once in this amount, and the economy improved, and then it went downhill. And they said, oh, we need to do another one, and they kept doing more and more and more, and eventually everything imploded. And I feel we're in the same boat right now.
Well, Hunter Biden's joining us in the vault, by the way.
Is that the? Is he going to give 10% of that silver to the big
10% for the big guy? Remember, 10% for the big guy. It's really interesting as to how they do this. I think politicians their primary focus is to get elected, right? Their primary focus is the next election. The United States has our next midterm elections coming up in November. So I think this summer or early fall, if once we're technically in a recession after July 28th, when the negative GDP number comes out 2 quarters in a row, what surprised me if August or September you start hearing some noise about some sort of stimulus bill to get the economy going again. Which is it basically undercuts everything that the Fed's trying to do right now to raise rates, right? If the government comes out with some sort of stimulus bill with expanded unemployment or expanded food stamps or stimmy checks for everyone, we'll see. That's what I think is going to happen before the election.
Even here, I think they're proud. They're saying that they're going to try to solve the inflation crisis or the cost of living crisis by giving out 37 billion pounds to the taxpayer.
In energy supports, right? Everyone's getting energy checks or something.
And California as well is doing the same. So they did that in the Weimar Germany. They printed more money because they thought it would stop inflation, and it doesn't look like they.
Let's kill inflation with more inflation, right?
So Jim, any last words to the viewers here as we wrap up?
Keep buying silver. Keep buying. I know it's tough right now with price. When you see 19, but I think we're headed to a really bad place, and eventually gold and silver are going to have their day, and go to all-time highs, both of them. And I'm trying to scrape together enough money right now to buy another monster box of 500 ounces to add to my stack.
Physical, of course, because ETFs I don't think is the right way to go.
Or just get generic if you for minimum premium. Go get generics. Go to pawn shops. People who are hard up their money, they go to pawn shops and they sell. And pawn shops typically buy the stuff at 90% of spot, so they're getting it. Pawn shops are paying people at below market rate, and you can typically pick it up really close to spot, especially if you know the pawn dealer and you're a regular buyer from him. But then you're getting more random stuff, right? Not necessarily what you want, but what he has. But there's lots of different ways you can get silver really close to spot price if you're creative and you get out there and you look for it.
Great. Thanks again, Jim, and nice having you on the channel. We'll have to keep doing this more regularly, and hopefully silver will catch a bid.
I hope so.
Okay.